like this vision where Tesla becomes a company that can produce millions of robotaxi every year.
If you ever speak to someone who's been in a Tesla when it's on self-driving, they're going to talk to you about it for an hour because it's so incredible.
John, this is a miss on the top and the bottom line for the fourth quarter for Tesla.
Look, 90% of the story right now, it's about AI, autonomous, cybercab, what I believe is at next level.
It doesn't work. It still doesn't work. So it works pretty good. I like it.
All that and more. So let's get to it. Tesla stock is up in the pre-market, sitting around that $399 range. Despite the volatility after the earnings, there really hasn't been a whole lot of movement for TSLA. I mean, for the past week, down about 4.2%. For the month, a little over 4.5%. So the stock hasn't been doing exceptionally well. Methinks the market expects a little bit of a downturn for earnings, but let's go ahead and see what the legacy media has to say as we approach the closing bell.
So let's start with the upgrade. Why the upgrade and why Monday?
So we did upgrade the stock a few weeks back, and really our view was looking at 2025 on the auto business, what's all the news flow that gets delivered quarter after quarter on the volumes and gross margin. We don't see yet, green shots. We don't see like a recovery in demand, but we see like a situation where we are very close to the bottom. So from here, very limited downside risk. And at some point, we'll get new models. There is a new Model Y coming through right now. There will be new, like lower price point models that are going to help volumes, and at some point pricing will ease, like the pressure that Tesla is under, like the rest of the auto industry at the moment, is going to ease. So things look relatively nice on that one. And then there is FSD 13. FSD 13 is really like a turning point in terms of self-driving capabilities. And even if we still see like many, many years before you see a very large number of robotaxis from Tesla on the road, we think this year the news flow and evolution is going to be very, very positive and is going to support the sentiment on the name. So what we're going to see this year is probably the release of a first like unsupervised version of FSD, like this idea that you can have your car driving you around and you don't need to keep an eye constantly on the road. And then the technology is probably right now to see like test fleets being deployed, and the company mentioned it in recent months, and we expect that to happen in Texas. So like this vision where Tesla becomes a company that can produce millions of robotaxi every year and redeploy deploy them across the country and across the globe, it's still like a multi-year vision, but it's going to get more and more tangible this year. And so like the stock now is trading like maybe on 100 times earnings, which is where it has been trading when the market started really focusing on the long-term vision and saw the long-term vision becoming more and more tangible. That's really what we expect for the stock this year.
Long-term versus short-term. Long-term, Tesla's going to have a fleet of robo-taxis, and a fleet of Optimus is more than likely. Short-term, Pierre mentioned that this may very well be the bottom of Tesla's automotive woes. If you build cars, you've been suffering. The business in nature is cyclical, and this macroeconomic environment has been kind of shit. But despite that, Tesla has been mighty resilient in the face of these headwinds that all the other automakers are facing. In short, Tesla isn't just an automotive company. They're an AI robotics company masquerading as an automotive company. But I imagine it'll take certain individuals a little more time to understand this.
Ross, how you feeling for this afternoon? What are we going to hear from the team?
I'm not sure that we're going to see a big departure from what your expectations are for them. I'm sure they're going to reiterate, cyber cab and robotics and sort of try to keep people focused on the future because they have nothing to give you in the current. So, we're not expecting much with earnings. So hopefully if they're good enough, the market will be okay with it. If they miss by a big number, that wouldn't be fun. But I think in general, Tesla wants you to focus on the future because the next year and a half look pretty stagnant to me.
Whew, thought Ross Gerber was a bull. Sounds like a hater to me.
I saw, I'm sure you did too, the video that Elon tweeted out or retweeted of the Teslas self-driving themselves out of the production line. I mean, that's pretty sweet stuff, is it not?
No, that's a gimmick.
Hater.
I mean,
that's, I don't know, everybody's talking AI. That's the best AI thing I've seen yet.
Before we proceed, I'd like to just give you an idea of what Ross Gerber is calling a gimmick. The day before Tesla's earnings call, the Tesla AI account on X released a video. The video shows freshly minted vehicles coming out of the Fremont factory, driving themselves to the logistics lot. They drive during the day. They drive during the night. I mean, Tesla's factories are buzzing no matter what time it is. I believe they had to traverse damn near 2 miles to get to the logistics lot. Granted, it's on private property. These are not busy city streets or frantic highways. But there is no human being in the vehicle. Look at it this way. There used to be a human that had to do this job. Now we've freed up that human to be more productive elsewhere. And this is only the beginning, folks. Tesla is going to solve for generalized autonomy. In other words, you can sleep on Tesla if you want. Me? I'm wide awake.
No, I mean, I've been using full self-driving for years, and basic driving, full self-driving does fine. Like, if you're just driving in a regular, normal environment, full self-driving works.
Right.
That's not the issue with full self-driving. The issue is all the other abnormal things that happen when you're driving that it's not able to handle. And so we call it, they call it the battle of the nines, which is like the 1%. 99.9% of everything is fine except for that 0.1 when that really matters, and then you run over somebody's dog.
Run over someone's dog? I've been using FSD for over 2 years now. Varying different degrees of success when it comes to the software versions. Yet I've never run over anyone's dog. And if I were to do so, I wouldn't blame the software considering I'm the one in control. Remember, this is a student driver. If you're using FSD, you're in control. I wonder how many dogs has Ross killed since he's been using FSD. My guess would be 0, but from this comment, he might be a mass dog murderer.
We're going to dive into Tesla ahead of its earnings. Now, Landon, shares Tesla have had this steady climb since the election. The pace of gains have moderated this year, though. So what does your data show you about Tesla?
Yeah, I mean, this stock has been on a nice run over the last 6 months or so, but a little bit of a pullback recently. And, when we look at the data, it's pretty strong. It's, everything that we've got is strong for Tesla. The consumer is big on EVs. I mean, people are searching for EVs in general. They're also searching for new Teslas. We did see a surge in searches ahead of the, potential removal of the EV credit. I think people are trying to get in on that before Trump takes that away. So we'll see how that is reflected in the earnings. But, web searches are up significantly, 20% over 6 months. January was actually up 30% on a year-over-year basis. We know that they have lower production costs, and as I said, people are searching. You can see here, people searching for new Tesla is up significantly. I think the push from the full self-driving version 13.2 was really a big eye opener for people. It's got 5x the compute powers before. It's on its way to full autonomy. If you ever speak to someone who's been in a Tesla when it's on self-driving, they're going to talk to you about it for an hour because it's so incredible, so impressive.
Well, maybe not everyone. I mean, if you let Ross tell it, the software is hunting people's pets.
So this is it's obviously bullish for us. This is we don't talk about this a lot, but like Folio has a very short list of what we call infinite hold companies. This is a company you can throw in a vault and lock the keys, and this is one of the 3. So for us, Tesla is one that we love long term. And really, for us, it's almost like, yes, they're clearly a car company, but you could make the argument that they're an AI company before they're a car company. And I think that's what's going to separate them. Before it was the electric aspect of their vehicles that separated them. But now I think it's the full self-driving and the AI integrated that's actually separating them.
Landon, I read a very popular website, and I like it because it gives you a whole plethora of information. And there's 10 analysts on this website. And right now, one buy, here's the analyst list: hold, sell, strong sell, hold, sell. Here's our one buy, sell, and hold. So the overall sentiment on Tesla right now up at these levels is extremely negative from an analyst perspective. Now, your data, which is much more high frequency, much more on the pulse of where Tesla is, goes the exact opposite of this. So who's got it wrong, Landon? Because I think I know when I put Lightfolio data against an analyst, and you've got a stock, even though it's still up about 105% over the last 12 months, it's down 9.5% in the last month, Landon.
Right, exactly. And you know what? I mean, if I was going to be bullish going into an earnings report, I would much prefer to have 9 out of 10 analysts disagree with me than agree with me. I mean, you know, there's a lot of value in being contrarian in markets in general. So I'm fine being on the other side of this one. And of course, we don't get them right every time. But again, we've been on Tesla for over 10 years now, since we first saw that initial spike when their first car came out and people were blown away. You know, this has been one that's kind of been on Lightfolio's radar for a long time. Now, we've had some bearish quarterly calls on Tesla that we've hit, and you know, we're not always bullish on it, but the data coming in on it this quarter is strong. Everybody's looking for ways to buy a Tesla. They're looking for more information about it. They're talking about it online, and when they are, they're talking about it positively. So this is all signs point to consumer demand increasing kind of situation, and we know that, you know, they're able to deliver right now. I mean, if you rewind 6-7 years ago, everything was, yeah, okay, maybe they have great cars, but they can't actually make that many. I mean, they just delivered 500,000 in Q4, up 2% on a quarterly basis. So they're delivering cars, they're making them quickly. The prices have come down tremendously. The technology is unbelievable, and everybody that speaks about it, that uses it, is talking positively. So
in this situation, it is a classic case of signal versus noise. Lightfolio data compared to automotive analysts that really don't know how to view Tesla. I think I'll roll with the numbers because, ladies and gentlemen, numbers don't lie. The world is transitioning to battery electric vehicles, and the only company that's synonymous with EV is Tesla. You can bet your bottom dollar, because I know I have, that of all the automakers, Tesla will reign supreme. And sometime this summer, when Tesla chooses to enter the ride-hail business, I'm willing to parlay that bet that they will also be the most dominant in that field as well. But I suppose time will tell. What's that? Phil LeBeau out with the latest numbers for Tesla.
John, this is a miss on the top and the bottom line for the fourth quarter for Tesla. Take a look at the stock, and as it moves right now, you're seeing that earnings per share coming in at 73 cents a share, 3 cents shy of estimates of 76 cents a share. Revenue, $25.71 billion. That is below what analysts were expecting. They were expecting $27.265 billion. So again, a miss on the top and the bottom line. We're going to dig into the report, see if we can get you some of the key numbers within the numbers, including automotive gross margins excluding the zero emission vehicle credits.
In the after hours, Tesla got as low as $369. That's not good. Or is it?
Tesla is here, and it's way off the lows here, now down just 2% after missing on the top and bottom. Is it about these cheaper vehicles?
Yeah, I think there's two key things here. One, committing first half of the year that they're going to produce those. I think there was a lot of concern that they weren't. This potential could push out in 2026. They doubled down there. And then the other thing that's important in terms of cybercab and autonomous, basically saying robotaxi, you'll start to get parts later this year, full volume production 2026. That Look, 90% of the story right now, it's about AI, autonomous, cyber cab, what I believe is at next level. Obviously, numbers itself a little sort of soft, but that's the key. I think there's probably a stock that's going to be up tomorrow.
Ross, always a pleasure to speak with you. I know that you look at Tesla very carefully, and the results are out, and I know that the stock has moved independent of what the company has told us about its the sales of its EVs. But I do want to get your take on the gross margin number that came in for the fourth quarter. Automotive gross margin, when you back out the regulatory credit, was 13.6%. Is this enough to move the stock in for those who are fundamentally focused on Tesla?
Well, I think this is actually a bad number, right? I mean, gross margins continue to decline even after all the layoffs and stuff last quarter where they got the benefit of higher margins. Because of that, now margins are continuing to decline because they're having trouble selling cars for obvious reasons. And so, you know, it's really a game for Tesla of like, they can manufacture actually a lot more cars than they're selling, so they just hold back, and then they have to do pretty much every demand lever possible to get rid of the vehicles. And so we're seeing it in the numbers. And you know, once again, I'm not surprised by it. They don't advertise, and the only advertising they have is Elon.
Right. Well, he's a pretty effective advertiser, we got to say. Ross,
not for cars.
Not for cars. For other.
When you actually look at Tesla's financial performance over the last 3 years, it's been horrible. And so this is a growth company at a huge multiple that isn't growing. And so what's going to get it to grow? That's the big question.
Well, I am curious, just beyond just building cars. I mean, there was this whole narrative, or at least really a whole model into the thesis, the bull market thesis of Tesla, that it was more than just a car company, that some of the technology components, AI, autonomous driving, blah, 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 all this sort of is what gave it such a higher valuation relative to a GM or Ford. It was a tech company. Is it still a tech company? And if so, when can we see them actually leverage some of that into real growth?
I mean, there's no question that it's a tech company in the sense of its focus really is on software and developing software for robots and autonomous vehicles. But their core business is selling cars and energy storage and charging. And that's what Tesla was founded. His mission is to advance sustainable transportation and energy, and that they were doing a wonderful job before they pivoted into a bunch of businesses that we're not sure how they're going to be, which is robotics and cybercabs. So, you know, and that's not coming anytime soon either. So I just come kind of like asking the question of like, where does the growth come from over the next several years until these technologies work? You know, I use full self-driving every day, and now I see Waymos every day all around me driving perfectly fine, and my car still can't do it. So I don't care how many times Elon says that it's going to work this year, and this is the year of full self-driving. It's just a bunch of crap at this point. It doesn't work. It still doesn't work. So it works pretty good. I like it. But it's driver assist. That's where we're at still.
Poor Ross. He's so conflicted. You can hear it in his voice. The distress of Elon throwing his hat in the ring with Trump, coupled with the transformation of Tesla's business from automotive to AI and robotics. You see, it's this stagnant level of thinking that would keep the great minds over there at Tesla from innovating and transforming transportation as we know it. The mission is still the same, Ross. You just have to take a step back from that tree so you can see the forest, my guy. In conclusion, despite the soft numbers, Tesla stock actually is up in the pre-market this morning. The analytical consensus for Tesla is quite bearish at these levels. But if Elon and the Tesla team can deliver on half of what they expect to deliver on here in 2025, you're looking at a stock that could potentially double in short order. What was it that Elon said on the call? He could see a path where Tesla is worth the next 5 companies down the list. Not only the most valuable company in the world, but worth as much as the next 5 companies combined? I wonder how long that will take. That's all I've got for you today. Be easy. Peace.